I'm Stephanie Hughes, a finance reporter at Financial Post, and I will be guiding this conversation on the advantage of higher payments options to keep pace with today's ever-evolving consumer expectations. To provide more perspective, we have our panelists, Michael Garrity, the Chief Executive Officer at FinanceIt. We have Rojan Nair, the Chief Growth Officer at VoPay. And we have Amir Taj Karimi, the Chief Executive Officer at Lexop, and Frederic Lavoie, the founder and Chief Operating Officer at Flinks. So
hello.
Thank you all for joining me. This is a very exciting time to be having this conversation because we've really come a long way from the early days of payments. So to kick things off, I wanted to go around the table here and get everyone's take on what recent innovation they've seen in the space that they're most excited for. So I'm going to start with you, Michael. I'm going to flip the question on its head immediately. What kind of innovations would you as a lender like to see or you have seen that you're excited for as a customer?
All right. Well, maybe I'll flip your flip
Okay.
and just get really crazy to start off this panel. So
reverse.
I'll put myself in the perspective of the lender. I think I'm the only lender here. We've got a lot of service providers. I'm the only lender. So we need to get repaid. Why don't I start off with that? And we basically like 100,000 a month repayments that we take from people. And we do everything with EFT today, the form of payment, right? And we do that because it's cheap. Like, we got to collect on average about $200 per person. It's 10 cents for an EFT. So that's why we do it, right? EFT is the dumbest. Like, if it was a friend, if we were going to personify payments, EFT would be the friend you wouldn't introduce to any other friend. Because it's so dumb, right? So if you were to ask EFT, like, hey, do you know if there's money in that account when we take it? EFT would say, no, I have no idea. And when are you going to collect? I don't know. Actually, I'm not entirely sure. If it's a little credit union, I may never collect, right, for example. So we send out this 100,000 asks for money every month, and we do it because it's cheap. And 95% of them go through, 5% of them fail. And then we hit people with fees, an NSF fee, which is not nice. I don't like doing it. You don't like getting it, right? But because the process is so dumb and there's no clarity on whether there's money in an account and whether or not, if you didn't have money, there's a check on hold and maybe we wait a day. EFT's too dumb for any of that, right? So that's the world that we live in today. And then I set up a whole collections department. We then start emailing people and calling them. And eventually we use companies like Stripe to pull real-time payments. But real-time payments are really real-time credit. It's not real-time payments. Right? The credit card system is no smarter than the EFT system. It just knows you have credit available, not payment available. That's a completely different thing. So that entire infrastructure that I have, an entire team, 40 people in my credit and collections department, all they do is just try to collect on how dumb EFT is. That's what we do. So if you were to think about innovation in the payment space, imagine if I knew ahead of time whether there's money in an account, and I gave people the option, if there isn't money in the account, that they could change the payment date and have a payment come to us another way. And imagine if all of that didn't cost me any more money, which is, you guys are going to tell me it's going to cost me more money. So real-time payments, right? This concept of, I think Moneris was working on some platform for having some smart view of EFT that was still cheap. That hasn't happened. Open banking would be a thing that could emerge that would allow all of us to have this insight and the customer to have control over the payment process. Well, that's not happening. So you're asking me what I'm really excited about. I'm excited about a bunch of stuff that has no current date for being delivered.
So we'll have to, I guess, continue waiting and anticipating. Rojan, what are you most excited about in this space?
It's funny that none of the technology guys said EFT is dumb. Lenders said that. So
dumb, dumb.
But there's a lot of areas where really the payment innovation are helping the lenders. So to pick a few, I can think about how now lending is getting embedded inside real-time payments. So, for example, in our own scenario, imagine a rental company trying to collect the rental on a pre-authorized debit, fashion, right? And the renter is short $500. So you can always offer, the payment company can offer through the backbone of a lending company an instant loan. So that's a big use case. Imagine a small to medium business waking up one fine morning and seeing that they're kind of short a few $1,000s between the account payable and receivable. So there's a cash flow issue. So that can be a loan that a lender can provide and the payment platform can offer. So that's a big thing. But also what I'm seeing now is this whole notion of platform. A lot of lenders, as you just talked about, they want visibility into cash flow. They want visibility into liquidity. They want visibility into the whole ledger. So the payment platforms are providing that. So why reinvent the wheel if that's already out there? So that innovation is really helping. And the last point that you mentioned, the big thing is, I mean, you got half of this audience here who are basically already leveraging open banking. And there's a lot of intelligence that we are providing to lenders today. For example, lenders can actually authenticate the accounts. They can actually verify the fund exists. So what does that do for you? I mean, you can actually speed up the approval. To your point, if there's an NSF, I mean, the fact that I did pre-check that the money exists, my NSF cost is almost negligible now, right? And then the fraud, you can eliminate all of it. So all of those things, you know, piggybacking on what you said, are some of the key things that we are already seeing lenders leveraging. So I'll stop there.
That sounds great. And Amir, what gets you the most excited?
So innovation in payments, one thing that I'm excited about is biometrics. And often when we think about biometrics, you're like, it's kind of boring. You think about authentication, but also it leads to voice payments, right? And we, in terms of speed, we at Lexop, we did a survey not too long ago with over 3,000 Canadians about why they were late on their payments the last year. And 34% said they forgot. So imagine if you could pay hands-free while you're making coffee or while you're making, as soon as it pops in your mind. So that kind of speed and biometrics can be extremely helpful. That's exciting for me.
Absolutely. When I hear biometrics, I think sci-fi, and it kind of has like that flair to it. But Frederic, what do you get excited about?
Am I the only one that had slippery shoes this morning? Mike, you said that nothing that you're excited about is something you control. It's in the future. It's been talked about for years, real-time payments. Well, I'll hit you up with something that I'm excited about that's actually within our control. And I think it's something that's going to be applicable for a lot of lenders. The dummiest part of EFTs is the NSF that they uselessly cause, right? They cost $40 to $50 for the borrower. How much are you getting charged? Like $2, $3?
I can't comment on that, I'm sorry.
Yeah, good. You talked about the 10 cents for EFT. I think that's a very good rate. People should ask you who your vendor is. So it's costing you as a lender a couple of bucks. With what we see in our systems, it's in the billions of borrowers that get charged by banks those fees. And part of the reason, yes, the rails, and we don't control the rails at Flinks, but one thing that we're rolling out now is there's a just-in-time moment when you see the transaction record of the borrower when they apply, but then the bank data is a black box. The balance goes up, goes down, you don't see it. And now we have the key to access the balance over time, where up to a year, you're able to see, hey, I'm going to hit the user with $100 payment. Does he have the funds? And you're able to prevent that payment from happening if you want to prevent the NSF. There's a huge benefit for them, the borrower. For you, as a result, the lender, you're saving your borrower from a very painful fee and a painful experience. And of course, the little charge that you get for hit up by every time there's an NSF, even for you as a lender. So that key that your user can now consent to offers visibility over the whole duration. Unless the payment plan is over a year, then there's a little step that the user has to take. But if it's within a year, then you have full visibility over the balance over that period. And that is being rolled out now. We have banks in production, and we're ramping up banks in production with that as we speak.
For sure, and this was a great summary of what's out there, what we're excited about. Let's talk about why it's important. Roseanne, I want to put this question to you. Why is it important for lenders to have faster payment solutions, and which area of lending do you think would benefit the most from this?
Yeah, I mean, faster payment in lending, this is a tech guy saying, so take it from me. The faster payment in lending is no longer a luxury. I think it's a necessity now. And it's going to be the biggest competitive advantage you're going to have. So, the traditional payments in lending process is typically slow, ineffective, and to some of the points that you made, is error-prone and insecure in some cases. So, if you look at the disbursement side, with the real-time payments, some of the open banking Fred was talking about, all of that can allow the funds to reach the borrower really fast these days. And there's this notion of alternate payment choices. It's no longer one choice. And it's not your control, it's the consumers. They want it, right? So they're expecting it. And on the repayment side, there's visibility lacking right now, and there's the reconciliation and probably the cash flow visibility. Lenders are not having that much. So fortunately, there's a lot of, in my life, I see a lot of repayment options that are automated. So you don't really have to babysit the repayment process these days, right? But I think the number one reason why faster payments are needed is because of human behavior. Everybody's expecting a faster, delivery and great experience, and if you don't do it, they're going to go elsewhere. I mean, think about it, right? Borrowing might be one part of a 3 to 4 step journey of a borrower. That's just one part. So you're buying a good, you're borrowing the money, you're paying for it, you are getting the goods delivered. And don't lie, everybody over here, when you go and do that type of stuff in Amazon, you're expecting instant delivery, right? So why is it different for a borrower, right? So that, we live in a world where buy, borrow, pay is one word going forward. So immediacy is the key. If you don't have that immediacy, you're not going to get the differentiator. And I think I know it's a bit strong, but that's probably why you need faster payment in lending.
Absolutely, and speed is important. It strikes me as another important factor to have engagement. And Amir, I understand Lexop takes this engagement-driven approach in its business. Can you describe why it's important for lenders to really engage with their clients, especially if they're past due on payments?
Definitely. So, a show of hands, who's ever been late on an invoice or a bank payment? Good. Everybody? Nobody? So how delightful was that experience being in collections? It's a terrible experience. Everybody knows that. And lenders often, when you're acquiring a customer, you're activating a customer, the engagement is quite, there's a lot of effort in it. As soon as you become in collections, the journey breaks, right? How many times you've called and it's like, all right, I'm calling for my past due account. And what do they say? Immediately, sorry, sir, we're gonna have to transfer you to collections. You're not even worthy to continue the conversation with that person. You have to become, you're a second-class citizen. So engagement is extremely important, especially for past due customers, right? They're still customers. Something has happened, right? Let's try to find a solution. And often when we talk about speed, we can use technology to be more humane, even though that sounds extremely ironic. But speed is key, especially when somebody's in collections. How many times has it happened that you want to make a payment agreement and you have to be on the phone for 2 hours? What if you could just choose your payment plan, make an arrangement in less than a minute, and you just resolved your account, doesn't affect your credit score, you're a more loyal customer now to the brand. So speed and engagement in that end can be extremely valuable.
Mm-hmm, absolutely, and we're talking about concepts and what's kind of important here. Looking for a tangible case study that we can all take home with us. So Michael, I know your company has worked with the home improvement sector to provide virtual payment product lending. Can you walk me through how this product worked and how important real-time payments and fast payment processes was to launch this product?
Sure. So the overwhelming majority of our clients are in the home improvement industry are like folks driving around in trucks solving problems for customers at their door. And so we created technology to make it really easy to allow people to get approved instantly in their driveway, and then ultimately we pay the merchant. And we pay the merchant through the dumbest payment methodology possible, EFT. We've already covered that. So dumb. Anyway, but they're fine with it because they're going to be hanging out and waiting for a couple of days to get paid. It's fine. And we use Flinks, by the way, just a little shout out, during that process of making sure that customers get approved instantly and we can get all the data on their account. They're a great company. Everybody should work with Flinks. All right, there you go. That's the one call out, Fred. I want a lower fee structure going forward.
Done.
So when we got called by Home Depot, which is not true, I called Home Depot 800 times. They eventually called back and said, yeah, listen, we're super interested in getting a solution from you guys in our home improvement industry. So build something for us. I'm like, great, give me the lowdown on what you guys need. And they said, hey, we want customers to come through any of our channels, online, in-store, in-field. We want them to get immediately approved. I'm like, excellent. We want them to get approved up to like $50,000. I'm like, no problem. We want a rate that we can set all the time. Like maybe it's $699, maybe it's $499, maybe it's don't pay for 3 months. I'm like, excellent. I could do all that too. And then we want you to clear funds if they want to make a purchase immediately and reconcile that immediately. And I'm like, oh, hey, I got this EFT thing and it is awesome. And they're like, yeah, no, that's not awesome. That is really dumb. So we then had to build something for them that allowed us to be able to grant that customer an instant approval, give them the credit that they needed virtually at any one of their channels, and then be able to make a purchase and have that be cleared funds in a minute. And then I'm like, okay, we can figure that out. Like, that's what the credit card rails is for. And then they said, hey, we don't want to pay you anything. How about that? So we don't want to pay any merchant fees for that transaction to get cleared funds in real time. I was like, hey, that doesn't sound cool. How about EFT? I've got this EFT thing. It's really great. So this idea that they want to be able to have real-time funds, real-time transactions, not have to wait on the back end for any kind of payment clearing, and they don't want to pay any merchant fees, that was a huge challenge for us to build. But we ultimately did. We built them a product, and then we had to leverage a bunch of partnerships. I can do call-outs. Marqeta, they had a clearing bank at the back, People's. We had a whole bunch of infrastructure in between that connected us into their POS system. And then we used the prepaid card rails, which was the only available real-time rails at the time, and again, still is the only available real-time rails. If Moneris ever gets their shit together, then we can actually have a real-time rails thing that's like cheap. But until then, we had to use these prepaid, which ultimately ended up being, I think it was like, I don't know, 50 basis points transaction fees as opposed to 300 if you're on the credit card rails. And that's the solution that we built for them, and then it went into an app, and we ultimately have been operating it ever since. It's called Project Loan. Everybody should go and get it. We both make money the second you do, so please apply for Project Loan right now on your phones. Thank you. Yeah.
Right now. And so, of course, part of these innovations, data plays a really big part. Frederic, can you, how can lenders leverage user data in the payments ecosystem to provide more targeted products and services?
Yeah, so I'll kick it off with a motherhood statement. When it comes to data in borrowing, bank data is everything. It's true today, and it's going to be true long term. Now, how I like to think about bank data and the way to leverage it. Any martial artists in the room, they'll like the analogy. It's the belt system. If you're a white belt, well, you're probably like me. When I got involved in the lending space, didn't use bank data at all. If you're a blue belt, you're gonna use that bank connector to maybe automate a few things like replace void checks. You don't have to have the user or the borrower upload it. You can just sync it with the bank connection. If you're a purple belt, now you use it for fraud prevention. If you're a brown belt, maybe you have it filled in your underwriting models. And then the cool stuff, the black belt, then you have it for your collection strategy as well as your upsell strategy. And I will tell you, from my standpoint, it is your job as a lender to migrate from white to blue to black eventually. Because what you see, if you look at the lending experiences of almost everyone in lending in Canada, in innovative lending, there is that step where, hey, the user has to pick their bank and then authenticate the connection. It's all the same experience in the front end, but there's wildly various experiences of the whole lending process from one lender to another, and that's because of what's happening in the background. So the cue is, hey, migrate and evolve your belts to black belt, and it's not, you can use partners like VoPay, like Flinks, to do that, but that's a decision that you have to do and push as a lender.
Absolutely. And as Michael eloquently put, real-time payments has been delayed. It's there's about one option out there. But Rojan, I want to put this question to you. Canada's real-time rails has been delayed further. What options are available for lenders to get access to these platforms?
Yeah, I mean, it's unfortunate, but not a surprise that it's delayed. But, I mean, to be honest, I mean, all of us in this room, in one form or shape, is using real-time payments now, right? It's out there. At VoPay, we do have quite a bit of lending and even small business in other verticals that are leveraging use cases that are related to real-time payments. For example, the way we interact with lenders, the three tiers, if it's a small loan, we take the traditional e-transfer rail, but allow a direct deposit into the account. So if it's small loans, right, under $25,000, so think about it. You don't have to go through the whole email shenanigan. You can just deposit the money straight into an account. So that's real time in one way. The other thing that we do, going to your boring, dumb EFT example. So what we've done is we've developed a product called IQ11. So the I stands for intelligence. So we have used open banking. We're leveraging Flinks there. And we actually verify the endpoints. So the traditional EFT, it's T plus 3, T plus 4, T plus 5. So it's a lot of time. So if you're a lender and $500,000 of your mortgage is sitting in banks' rails, who's benefiting from that for 4 or 5 days? No one. I mean, banks might be, banks are, but lenders are not. So our aim is through that to get you a T plus 0 or T plus 1 settlement. So you get the money out of the door really fast, meaning you can start collecting the interest. And think about that experience comment I made earlier. The borrower is no longer sitting there for 5 days waiting for the money. The money is coming same day or next day. So that's the IQ11 product. But we are now seeing a new trend in the microloan segment. So buy now, pay later, and the $1 trillion gig economy, right? Think about an Uber driver in winter wants to buy winter tires for $800, and you don't have the money. So you apply for a loan, and what if you can actually push that money straight into a Visa Direct or MasterCard Send instantly? So you apply, as long as you can underwrite it immediately, and it's $800, what if we can push it to a Visa Direct or MasterCard instantly? Because think about the gig economy. Those are not people who are going to walk up to the biggest bank in Bay Street and get an account. They're the ones who are going to get a Visa Direct or MasterCard Send. So if you can enable your endpoints into that level, it's going to be amazing in that micro loan sector. So those are some of those real-time payments people are already using. A lot of lenders leverage these things today. So in one form, it's there. But what I see happening with the real-time rail, eventually when it come out, is much solid use cases can be addressed because it'll be like a proper structure behind it. Mm-hmm. So that's the way I see the evolution happening.
For sure. And from evolution to something of a competition, you're a business leader working in the fast payments ecosystem. What kind of a leg up does speedy payments processing strategies provide for lenders, especially when it comes to collections?
So when we think about speed, we often talk about speed of the payment processing itself, but there's also speed of the user experience. So in terms of advantage, competitive advantage, you're saying, so one of our clients is Volkswagen and Audi Finance Canada. And in terms of speed, especially in collections, often what happens is that maybe the person is past due, there's no money in the bank. How fast, or in the credit card, how fast can that person update that payment method, right? So how fast can that person, does that person have to go on a portal online, a client portal, log in, credentials, nobody remembers their password. So how fast can we update that payment method? So that's one of the advantages of speed can have a big effect. It's that the path of least resistance, right? Going from point A to point B with a few amount of obstacles as possible, especially in collections, right? Because rule number one is collection is catching the person's attention. And once you caught it, you have to bring them towards the payment, grab them by the hand, bring them towards the payment. So how fast can we do that? And that's what we did for them, right? So the idea is to offer a 3-click process when somebody can update their payment method, choose whatever bank they want, and resolve their account. So speed is often related to processing, but it can also be the user experience. That's very, very advantageous.
Absolutely. Make it easier for the customer. Don't frustrate them. Don't make them leave the platform.
Collection is already frustrating, right? So you don't want to add on that.
Exactly. Michael, as a lender who works with some of these companies here, how do you benefit from faster and more efficient payment systems?
Yeah, well, as I described at the outset, there are a bunch of areas that we're already incorporating folks that are in the space, and there's tons of great companies that are helping with some component of it. And whether it's getting people approved in the first place, because ultimately you want people in my world where we lend money, you want to make sure that you know who everybody is, you get them approved really quickly, you don't want to have that be laborious at all, either for the borrower or for our merchant partner that we're granting the cash to ultimately. So every element of authentication is a component of payments, because you have to authenticate people. I mean, it's really easy to give money out, right? It's tougher to get it back. So you want to be, really specific about who you're giving money to and making sure that they are who they say they are, especially when we're in our online channels, where you're not face-to-face and you're not relying on the merchant to validate identification or anything else. You have to do all of that essentially through the virtual channel in a millisecond. So there's tons of folks like Flinks that we work with that help us to get that thing done. Then on the payment side, again, where we had to, in the case of Home Depot, where we have to clear funds in a millisecond, give the money out, and then it's gone into the ether. So when you don't get it back, right? So the idea is making sure that we understand what the transaction is, we understand the location, we've authenticated it. So the whole, again, payments is relatively easy. You want to go really fast in payments, you can. If you want to get your money back, it's a little harder, right? And so, again, authenticating the transaction flow, where is it coming from? Is this transaction originating in Russia when we're supposed to be processing in Rexdale? That's a bad sign, so we have a whole bunch of authentication activity. And again, we use a ton of third parties, companies like Onfido and others that we use, that we leverage to ensure the integrity of the transaction. So payment, from a speed perspective, I think there's a couple of things that are coming, hopefully, knock on wood, come eventually and make our lives a little easier. Until then, we'll continue to rely on great third-party companies to help us make that easy.
Absolutely. And speaking of Flinks, Frederic, can you walk us through how data tools have evolved over the years, and what are some of the most exciting developments in this area that not a lot of lenders know about, or you feel that doesn't get enough attention?
Yeah. So I was involved in lending in 2013, first time. Anybody was there before that in the room? Okay, so we'll talk after. But, and our big idea back in the days was, hey, we're gonna start originating loans online, only online. We're not the only one, we're not the first ones, but that was the idea. And we were collecting void checks, PDF statements, and then we have to print them out so that the underwriter would look with the magnifying glass to see which documents were doctored and not. So that was the start, and I think if we had stayed there, that wouldn't have worked because the fraud was through the roof. And then eventually we got that bank connection, which ensures a certain integrity of the data. When you know that the data you see is actually what's there on the bank side. And I think this is in large part why bank connections, like what we do at Flinks, is so popular in innovative lending. Now, the biggest evolution after that. There's what you do with it, and I've mentioned the belts, and Mike will talk about how we can evolve you to your next belt. But so how to leverage that data is a big chunk, and truly it's there. It's in the raw. A lot of the big banks, for instance, they don't either not have consent or the desire to go and leverage that. And when you look at the successes outside of lending or even finance, you look at a Spotify, for instance. How are they bringing such a great experience? It's because they're leveraging all of the data that the users produce and make available to them. And so that's what we're seeing now, is lenders starting to not shy away from, hey, the user has consented to this data for me to provide them with a better experience, and I'm going to use it. And so there's a bunch of data tools that are usable there, but the data is there. It's just an idea of, hey, how far am I going to go in that journey? And then the last piece, which is a forward-looking big innovation, is the key that I mentioned earlier. Is this is not small. It's the borrower saying, hey, I'm going to allow you to see data over time, and this is the banks partnered with us to make that actually available. Because you've heard probably the pitch from either us or other vendors like us in the past, like, you're able to refresh the data, and guess what? After 2 weeks, it breaks. The password changes, there's an MFA and whatnot. So there's not an actual continuous feed that's reliable. And now it's starting to be the case. And years from now, every bank will have that key issued, or it's going to be possible for you as a lender to get that consent from the borrower and to access that data over time. And that opens up a bunch of possibilities for refinancing, for better collection strategies, and for upselling products. And there's a ton of details that's in there that allows you to do all of that.
Sounds good, thank you. And I'm going to squeeze in one last go around the room kind of question, lightning round, as it were. So hopefully over the course of this conversation, lenders get a better sense of how they can benefit from high-speed payments. I want to go around one last time and get some practical advice on how lenders can get started today. Like, what's the first step? Frederic, can we start with you?
I think it's looking at where are you in that journey, bank data being at the center, and then even before that, there's one of the ideas that I like to think about around collections, which is the theme here, is the best collection strategy, and I think you'll resonate with that, Michael, is to have better origination, so that you don't have to face with that incredible amount of either fraudsters or debtors that default. And when we look at the last 2 years even, I don't know if people have bought stocks from Affirm or Afterpay, or there's another big one in Europe that I'm missing
Klarna?
now. Klarna, yeah. Please don't show your hands because you're going to tell everybody that you're a bad investor. But you've seen 90% of that stock value go out the window. And why is that? Well, there was a speed, not so much in the collection side, but a speed to lend to everybody, which is what's your point. That was your point earlier, Michael. So that market cap of, there's tens of billions that have disappeared because eventually everybody woke up and realized, hey, the defaults are out of control. And so the big idea that I take home as a lender is, yes, if you want to optimize your collections, awesome. The best way to do that is you roll back a few steps and you ensure that you have that origination that's nailed and that you're a black belt at that. So that would be the take here.
Amazing, thanks. Amir, any quick practical advice for people looking to get started?
Well, to get started into lending, obviously, I agree with you. You have to be black belt in origination. But in a good economy, there's always collections. In a bad economy, there's a lot of collections. So you have to deal with it. This is reality. And one approach is the path of least resistance. Take away the embarrassment of being collections and take charge, right? Be empathetic, be flexible, be digital. Nobody answers phone calls anymore. Don't call people about collections. Nobody reads letter mail sent at home. Do not send snail mail, right? So engage people where they are. It's on their phone, whether via SMS, email, WhatsApp. People like privacy. especially in collections. I want to handle it on my own without my family knowing. I want to make a payment agreement on my own with just a few clicks. So that's the idea. You could be a black belt in user experience as well.
Amir, are you raising capital?
Soon.
Hit me up.
Sounds good. Okay, Roger, any wisdom to impart here?
No, I mean, the two things listening to the conversation that comes to mind is, if you are in the lending space, don't try to reinvent the wheel when it comes to a lot of the stuff that has been discussed, because it's already there. We found out, we were talking over there, so we leverage at WoPay Flinks, and we provide service to Lexop. So we're finding all of a sudden, all of these things are connected. We have many lenders, we provide our service here. So why reinvent the wheel? So that's one thing. The other thing is, open banking, there's a lot of fuss about it, there's a lot of notion, all of it. But at the end of the day, think about it like this. If I have a $100,000 asset and I go to a bank and ask for, let's say I have 100,000 asset in one bank and 500,000 asset in a different bank. So if I have 100,000 asset in one bank and go there and ask for, a $500,000 loan, they're only going to have that visibility with respect to that relationship, and most likely that loan is not going to get approved. But what open banking allows is to get a 360-degree view of me. So that's the perspective you have to look at when you think about things like open banking. Can I get a holistic view of the customer? Because that's the perspective they're bringing to the table. So if you don't see them through that lens, you're going to lose that audience. So those are the two things I would say lenders should probably look at.
For sure. And Michael, final word to you. As a lender, talking to other lenders,
Yeah.
what would you say for them looking to make that leap?
Join the fight to lobby for open banking faster, right? Inefficiency and cost inefficiency lives in darkness. And we currently live in darkness in Canada as it relates to a 360-degree view of every customer. They should have the power to be able to take their data and their information and get better transactions, cheaper transactions, a better view on any lender. And we all live in darkness. So we have 36 integrations with different data source providers or third-party services to help us get the best view of every customer we can to be as fair as possible with them. The only reason we do all of that infrastructure and maintain it every year is because open banking is not a reality in Canada. So if you're a lender and you want to reduce costs and make better decisions, lobby government to have open banking go faster. Straight up.
Straight up. And I think that's a really powerful call to action. And in summary, it sounds like transparency, need for speed. Hey, that's the name of the panel. Those are the things that will help people get ahead. So we're coming to time here, and I want to thank the panelists for providing their expertise. I want to thank the audience for joining us today. Really appreciate it. Hope you all learned a lot. I've certainly learned a lot. And I wanted to also thank the Canadian Lender Summit for inviting me out here. I've had a lot of fun.
Thank you. Cheers.
Thank you.
Thank you.